Hello, everybody. So for the first time today, I want to talk about the ARK Invest's venture fund. It is a fund which in the US you can access through SoFi. It's not a fund that you can access just about anywhere else. It's not like an ETF. It is a fund that trades every quarter and that is redeemable every quarter. And it is really this hybrid between private venture capital type investing and public investing. It's a new thing. It's what Cathie Wood has been working on for many years now. And of course, she's not trendy anymore. And so nobody really looks at her stuff anymore, except I do. And I think it's a very interesting proposition. So let me just cover the ARK Invest Venture Fund. And of course, the chief advantage of that fund is that we are accessing companies that we can't access elsewhere. And you may see the companies loud and clear. SpaceX, right? Elon Musk. OpenAI, right? Elon Musk was a founder. Elon Musk. xAI, Elon Musk. I mean, this might as well be called the partial Musk fund. And there's other very, very popular companies like Anthropic in AI, like Figure, which is robots, right? Like Discord, and they also own, by the way, some public stocks. This is a downside. I don't really understand why they own public stocks. My guess is that they own those public stocks to park the money when they exit actually illiquid venture investments. That's I think, why they own these public stocks. Less than 10% is parked in these stocks, and that's the way I look at it. This is likely the cash, and that they sell it whenever they want to add to private companies. The big advantage of the venture fund, in my view, is that you're not paying a exorbitant premium on the price of these private companies. You're paying the NAV, which is communicated quarterly by ARK Invest. And I find that very interesting because it makes for a very much not that volatile of a fund. Like I said, it's a hybrid. Now, what is one of these downsides in this hybrid? To be really, really honest, it's the fees, the expense fees. Over 10 years, this is going to cost a lot of money if you not want to own this for a very long run. In other words, owning this, in my view, is like you better make sure that it goes up soon, because that's an expensive stock, and that's the problem of Cathie Wood's ETF. But of course, because this is so new, because this gives access to companies that are inaccessible elsewhere, you are going to have very high fees. It's understandable. I understand. Nonetheless, it's a downside. And of course, if you're a boglehead, if you're a fan of index investing, this is obviously not for you. No investment advice ever on this channel, by the way. Nothing I say is anything but entertainment. I just provide entertainment. That's all I do. Only entertainment. So let me continue this entertainment. What is the weight of these companies? And that's very important, because some of these companies may be there just just for the marketing. For example, X Corp, right? X.com, i.e. formerly Twitter, that's only 0.66% of the ARK Venture Fund. So you have such little exposure to X, the social media, that really this is mostly marketing, it being on there. In my view, in my opinion, I could say the same thing for Graph, for Sortium, for Flexport. These positions don't matter, but there are some real positions in there that are not marketing, like SpaceX. You're almost at 13% of the fund is SpaceX, and you're buying that at NAV, right? Epic Games, it's a way for you to access that without having to go through Tencent, and you're paying that at NAV. Same for OpenAI. And OpenAI is obviously a company that a lot of people would want to be investing in right now. You also have companies like Databricks, right? Databricks, the chief competitor of Snowflake, is in there. There's a lot of Anthropic, heavily discussed company. Figure AI, heavily discussed company. So these companies, in my view, they're quite interesting. And, if they were a publicly traded company, they would have their own analysis. You bet that if SpaceX was a publicly traded company, I would do a full analysis on it. And OpenAI, the same thing. OpenAI is the hottest company of the past 2 years. So this gives access to these companies at NAV, and I find that quite special. Now, one of the chief advantages of NAV is that you have, volatility to the upside, but it's fairly low volatility if you look. I mean, the stock was trading, right, more than a year ago. It was trading at, what was it, like 16, 18 bucks. You can see it was probably around 20 like 18 months ago. So 16, 20, and now it's trading at 26, 27, may go back to 28. It's been fairly smooth, and the reason why I think it's been smooth is because every week the NAV gets updated. And how do you update these NAVs, knowing that this fund, as I've noted, you have 9.2% of the fund that is public, so this gets updated all the time, but the bulk of the fund doesn't get re-evaluated all the time. It gets re-evaluated whenever there's a new funding round, right? That's kind of the key, or whenever there's like a substantial impairment of some kind. It's tough to evaluate what these stocks are worth, and so I try to go in the prospectus to know how do they actually calculate the fair valuation of these private companies. And we don't learn much more. We don't know much more than they have a valuation designee. My guess, by looking at it, is that they reevaluate these companies based on the latest funding round, as it is usually done in these companies. And of course, there's a built-in exit at NAV every quarter. This, in my view, provides a smoother ride, and it stands to reason that Cathie Wood's ARK Invest launched this fund because, her main publicly traded fund had such volatility that maybe doing this as a hybrid of venture capital is a better way to go. Anyways, she's been spending a lot of time promoting the venture fund. This is in her promotional material what she explains to us about the venture fund, and feel free to pause the video and read. There's a lot of advantages in my view compared to a traditional VC, and the chief advantage being that this is accessible without being a VC, without being an accredited investor. And you're accessing to some of the astute knowledge that team has in that field, but you also have something that is somewhat similar to stocks, where you have easy exit because there's a quarterly redemption of 5% of NAV every quarter. So it's somewhat of an easier exit than, say, a VC, where a VC, you're stuck in that company for 10, 15 years, and it's either going to go to quote unquote the moon or to zero. So I like that structure. Moving on, how do we know? So how do we know how much they're paying for these private companies, right? That is the question. Well, the way they announce that is through their news, right? They have their news feed for ARK Venture. If you go on ARK Venture and look at the news feed, they publish. So this is an example of a company that they acquired recently. You can see they invested in xAI, the supercomputer of Elon Musk that he launched. They invested and they participated at the 6 billion Series B round. And so, of course, if you look at that private company, the 6 billion Series B round, that gives you one valuation. The Series C will likely be a much higher valuation, and when that much higher valuation Series C comes around, which will likely also provide more money, when that happens, the value of xAI would likely be updated in the portfolio of the ARK Venture Fund. And if unfortunately it's going down for some reason, there's an impairment for some reason, it is the valuation designee, as noted in the prospectus, who would take it down in NAV in the portfolio. But the valuation is very human-driven, human-determined. You can see also the valuation at which she bought the bulk, about 4%, about her OpenAI position. You can see she bought it at a valuation of 86 billion. So that valuation right now is actually just about twice as high as that as the valuation right now. And she's actually participating on the new round going on OpenAI right now. So is OpenAI going to be $1 trillion company sometime? It could be possible. We've had 0 to $1 trillion companies happen in a matter of 6 years. 8 years for certain assets like Bitcoin. You could get that in companies in AI this quickly. I mean, of course, valuation is going to look nosebleed, but look at what you're doing with OpenAI, right? You're manufacturing intelligence. It's pretty crazy. You're disrupting a Google. So again, I'm not here to judge whether the valuation of these private companies is nosebleed or not. The only thing I want to say in this video is that the ARK venture fund gives access to these companies at NAV, which I find a quite valuable value proposition. And lastly, if you're interested more in this fund, I would recommend this article. Just type it up online and it will show up. And it's comparing the ARK venture fund, right, which you can access through SoFi, like I said. But there's other brokers. Titan is another one. You can also access it through other channels such as Pershing, Hilltop, Trade PMR, Matrix Trust, Fidelity. Anyways, just look at that. SoFi is probably the easiest way to access it. So that's one way, but it's better than say, well, who am I to say that, right? No investment advice, but one of the chief advantages is that you're not paying that major premium compared to a fairly popular closed-end fund when it was launched, which was the DXYZ, which also has a lot of innovative companies. But you may remember when it was launched, I covered that stock briefly, and it had pretty darn nosebleed premiums over NAV. ARKVX, ARK Venture Fund, allows you to pay NAV and not pay a premium on top of NAV. Now, the question is NAV undervalued, overvalued? Well, that's very, very tough to say, and I say it's very much based on trust in the management of the fund, right? Trust in Cathie Wood, but also trust in those companies. And, you know, SpaceX, I would have no issue owning SpaceX, right? Even at $150 billion valuation, I would have no issue owning SpaceX. There's a lot of other interesting companies in this fund. One of the other advantages is not only do you have an exit, like I said, I've said that multiple times, you have an exit every quarter, but also the fees are actually lower than, say, the DXYZ, almost twice as low. So anyways, I find this very interesting. This provides exposure to assets that we usually don't have access to. And, you know, I'm interested. I find it interesting. We'll see where it goes. There are so many opportunities in the market still today, but you know, we'll have to see if we have a wave of overvaluation in public markets at some point. Maybe this stock will not see the same overvaluation from the very reason that it has, in my view, fairly low volatility compared to the components that it has. Anyways, that's kind of how I view this. Obviously, no investment advice, no financial advice, just entertainment. Please like, please subscribe, follow me on X, follow me on Patreon. I appreciate all of the support. Have a wonderful day.